This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pashikadis. Thanks for joining us at XM.com. A cold U.S. inflation report sent shockwaves across global markets yesterday as investors reassessed the path for interest rates. Annual inflation, as measured by the Consumer Price Index, clocked in at 3% in June, just a shade lower than the consensus estimate of 3.1%, but a sharp slowdown from 4% in the previous month. Core inflation, which strips out energy and food prices, fell to 4.8% from 5.3% in May, also undershooting market estimates of 5.0%. These numbers reaffirm that U.S. inflation is cooling off, although the Fed hasn't won the war yet, as underlying price pressures are still a long way from the 2% target, and the tightness in the labor market suggests the rest of the journey might be the most difficult part. The market reaction was explosive, with the biggest casualty being the U.S. dollar, which fell through the trapdoors to hit a new 15-month low against a basket of major currencies. This mirrored a similarly sharp drop in U.S. yields, as traders concluded that July will probably be the Fed's final rate increase of this cycle. With rate differentials compressing, it was the yen's turn to shine. Dollar-yen has fallen by almost 4% since Friday, which has been fueled both by the unwind in Fed rate bets and by speculation that the Bank of Japan might finally adjust its yield curve control strategy later this month. The S&P 500 stormed higher to hit its best levels in 15 months, closing just 7.2% away from its record high, as the cold inflation report reinforced optimism that the U.S. economy can achieve a soft landing. The spotlight will now shift to the earnings season, which will fire up tomorrow with several major U.S. banks reporting. Gold prices enjoyed a fantastic session too, piercing above some key resistance levels to trade above the $1,960 level early on Thursday. With real U.S. yields and the dollar falling without a parachute, investors got the green light to load up on bullion, which is now less than 6% away from record highs. As for today, the main event will be the latest round of U.S. producer prices, which could help cement expectations that inflation is on its way down. Jobless claims will also be closely watched for any clues on the health of the U.S. labor market. Over in Europe, the minutes of the latest ECB meeting will be released, although they are unlikely to contain any major euro-impacting revelations. This is today's Daily Market Comment. Thanks for joining us at XM.com.